Hey, welcome back, my friends, to the Predictive Playbook. I have my co-host Steve Mera with me, and you can tell by my background we're going to be talking about some charts, some Bitcoin, and we're going to produce quick-hitting segments so that it makes it very easy to see this live or, more importantly, archived anytime that you want, 24 hours a day, because a lot of these shows are very green shelf-oriented, and you could watch this show a month from now and use it as a reference. So welcome to the show, Steve. How's everything going?
Yeah, John, it's going great, and I'm with you on that concept because the markets are quick moving, right? By the time we finish this segment 5 minutes from now, Bitcoin has changed, and the true price is no longer the true price. We talked about that, but the markets, especially your forex currency markets, are literally 24/7, and so it makes even more sense to have this available 24/7 for people around the world because sports is international, but most of our viewers are Canadians and Americans when it comes to NFL, NBA. But we're talking financials, especially the forex markets and the Bitcoin market. That is truly, literally global. So I hope we get a big following doing it this way.
And for everyone that's been loyal followers of this show, we created a $50,000 trading account to show live, real trades that Steve and I will make. And I doubt whether we'll ever disagree on a particular trade. But like one of the archive shows, for example, is going to be on the option trade we did last week with Apple, where I wanted to show proof that you can be right on the call and actually lose money by trying to play the earnings announcement game. So that'll be a video coming up on the YouTube channel at the Predictive Playbook that you can it'll be archived. You can look at it anytime you want, and that show is good for forever and ever because it is a great lesson. It's a great case study to do. So as you can see, we're long the Aussie futures here at 73.90, and we're short the S&P 500 44.07, and we're fortunate enough to be up $1,632 so far. And honestly, Steve, that can vanish in a nanosecond, so we better finish the show quick before that disappears. But no, seriously, let's take a look at Bitcoin here. We're going to look at Bitcoin and the Aussie, I think, for this show. We're going to add this to the screen, and then I'm going to make it bigger. And what you see on here is the Bitcoin futures for September. And over in this area, we had that breakout of the descending triangle. Nice little pop here, but again, we're running into that 40,000, 42,000 area, and for whatever reason, it's just not able to punch through. Bit of an engulfing candle here, not a true one, but it engulfed the day's open and close levels, and now we're getting a little bit of follow through, and I suspect that crude oil is a minor factor in this, Steve, because now this COVID variant is making headline news that demand for crude, demand for gasoline, heating oil, jet fuel is expected to wane a little bit. One day does not make a trend, though, and I'm still out there thinking that this variant is going to be held under wraps, and it's not going to produce what some of the talking heads on media seem to think. But what is your trend following stuff saying to do with Bitcoin now?
Well, what's interesting about crude and Bitcoin is keep in mind the monster move, that one-day move down, came about a week or so ago, a couple weeks ago in crude, and we always say the market knows before the news knows. So if this is what moves crude now, it's probably that move 2 weeks ago. And it's the same thing with Bitcoin. We really had the big move in Bitcoin about a week ago when we came back from the Friday close to last Sunday's open. We had that huge gap. Because Bitcoin is 24/7 on Friday night and all day Saturday and all day Sunday, but the future markets, of course, closed Friday night, reopened Sunday 48 hours later, so we get a lot of gaps often on the Sunday open. That initial open last Sunday for the August futures at the end of August is 34,500, and within one day it was up to 40,500, and it's really been trending sideways since. So I do think we've seen a little bit of a pullback. I'd be surprised, as I mentioned a couple of weeks ago, I thought that 29 to 30, if it held, which it looked like it was going to, is going to be the all-time bottom for quite a while. I still feel that way. Unfortunately, with such a quick shoot from 32 to 40,000, really not much time for anybody to buy in last week. We are starting to see a little bit of a pullback. If we get, maybe a 50% retracement to the mid-30s, that probably is the time you want to get in. But long term, I still think there's a nice bottom in around 29, 30,000, and there's unlimited upside, obviously, with Bitcoin, as we've seen. So I think the risk reward is setting up nice for a long term trade. Of course, you and I aren't necessarily long term traders, and I very rarely am. And we're not financial advisors, as we always say. This is not a long term financial advisement show, but I do think the risk reward for Bitcoin to the upside is very good. Although it looks like we might have, a pullback of a couple thousand over the next few days. But it's been kind of quiet. S&P's been kind of quiet. Crude oil, for the most part, has been kind of quiet the last few days after that big drop. But we often see things rolling over. I think S&P and crude could be rolling over, but I don't think Bitcoin is.
Yeah, I agree. And if you can see where my cursor is here, I put crude oil on the right, Bitcoin is on the left. At 36,650, Bitcoin is where I personally get interested in a test of the waters. I wouldn't go out and buy 5 contracts. I would buy one
Well,
and see how it goes.
5 contracts with one. Don't forget.
Well, that's true. That's true. You get 5 times the bang. It's extreme leverage,
Right.
which means extreme risk. On the crude oil chart, this might be one that we'll add to the portfolio of trades because we have a big downdraft, and now we're getting a bounce off the lows, but that's it's an inverted hammer, and a very high probability of the time you're going to get tomorrow. You're going to get a retest of this low right in here, and if you get follow through, then you stay short. So as long as we don't take out the opening price up here at 71.51, and we're currently 70.66, we'll add a contract of September crude oil to the trade.
Yeah, I really like that, John. I think this is a really good shorting opportunity as of right now in that above 70 range. So of anything we're talking about today, that's probably the trade I like the most, is going short crude. And keep in mind, people out there, there's a regular futures contract for crude. CL is the symbol, but of course there's a QM, which is a micro or mini contract. It's half. So for those that have a little bit less bankroll or a little smaller risk reward, you can do a half futures contract, which moves exactly the same. So unlike Bitcoin, which is very expensive, you can get in for crude a little bit less. And there's also ETFs. USO, of course, is the big one going long, but there's I believe DBO. There's 3 or 4 of them that are inverse ETFs. So this is a very playable trade for everyone out there. Even people with just stock accounts can do an inverse ETF. Maybe we'll put them in the show notes afterwards. I'll do a little more research. I haven't looked at it for a couple years. I know DBO, I believe, was one a couple years ago, but there might be some that are better now. But I think this is a textbook example. I'm just looking at my charts here on the side. Let's go back to Monday, July 5th, the day after the holiday weekend. Crude closes that Monday at 75, basically 75 and a half. It opens the next day at 75 and a half. It's never touched that spot again. A few weeks later, it comes back up a little bit, 74 and a half. Goes all the way down, as you mentioned, a few days later on that big low down to 66 and a half. And we had talked about 70. I'd said back 2 weeks ago, we were spot on this one about the floor, and the resistance once again was 70, and it broke hard below that. And just like Bitcoin, it happened so fast, you missed your shorting opportunity because within a day it went from 70 to 66 and a half. But now we've had that pullback, like I think we're seeing with Bitcoin in the opposite direction. It's pulling back to the mid-30s is when you buy. Crude once again got all the way up a couple days ago last week. Closed at 73 and a half, opened the next day, closed right under 74, 73.95. And then this Monday, yesterday, it opened 74 and it closed 71. And now it's closed even lower. It is a hammer today, but that doesn't scare me. I think it breaks down. I think it has been unable to take out those highs from a few weeks ago. It's tried 2 or 3 times now. This really looks like it's rolling over to me. And look, you put a tight stop loss. Above 74, I would change my view on this. And we talk about how they trigger these sometimes. So put your stop loss at 75 maybe. Go short here at 70 and a half. Great risk reward. Once again, you're risking 4.5 before you're stopped out for a market that could go down to 60, 50, 40, 30. We've seen that within the last year or two. We've seen those numbers. So you're talking about a 4, 5, 6 to 1 risk reward ratio. And that's the same thing with Bitcoin. If you can get it back to the mid 30s, you're talking about like a 6,000 stop loss lower for literally 100,000 upside. So, and we might be right, we might be wrong, but this is how you have to look at it. It's all risk reward. And if you're getting a 6-to-1 risk reward on an even money bet, I'll take that every time. But it really, the chart formation, if you see that long run up and it looks like it's rolling over. Bitcoin, of course, had the big run up and it crashed down a little bit. So that's why I'm bullish on that. But S&P is doing similar. I mean, we could maybe, I know we're doing quick hits, maybe end on the S&P here because I think S&P and crude are somewhat correlated right now as well, as you mentioned, because if there's concerns about the economy, about the COVID, you look, S&P and crude have been in a straight line up. Look at that. I mean, they almost look like identical charts. Look at the correction last Monday. The S&P was down 2 to 3%. That's when crude was down. So, if you look at the long-term correlations, your numbers aren't going to say S&P and crude oil necessarily correlated more than maybe half, but I think it makes a lot of sense why they are correlated right now. And I kind of feel like, interest rates and even crude might be front-running indicators for the S&P. I've been waiting for a reason for the S&P to roll over, and it keeps trying to take out highs, and it does it, but it does it weaker every time, and then it just kind of rolls back over. And here again, I've been wrong about the S&P. It makes no sense to me why it's been going up for 8 or 9 months. I wouldn't have predicted that last summer. I understand why it's doing it. It's because money's cheap. There's nowhere else to put your money. The Apple and Netflix, the big boys actually benefited from the shutdown, which is a whole nother podcast we could do, which is screwed up socially, in my opinion. But, there's a lot of reasons for it. But at some point when it's like the first or second most expensive and overvalued market in history, once again, your risk reward, it might go up another 10%. It might go up another 20%. It could. But I'm not going to make that bet because we know it could go down 50%. We've seen it happen 2 or 3 times in the last 2 decades. It's gone down 50%. So there again, at best, your upside is 10% probably, and your downside is a legitimate 50%. We've seen it happen several times in our lifespan. So that's a 1 to 5 negative risk reward ratio. So once again, I'd be very careful with S&P, and this is one that really hits home because almost everyone listening probably has some kind of exposure to this. Whether if they have any kind of 401k or any kind of investment fund, they're long the stock market because there's really nothing else you can do. So what you can do is go to cash, and cash is awful right now with inflation, but losing 1 or 2% a year in cash with inflation is a lot better than losing 40% of your savings if this crashes again. So just something to keep an eye on, and it shows why diversification is so important. You could also, like I said, that the inverse ETF for oil, the DBO or whatever, which one we're going to recommend, that also is a good hedge for your long stocks if you can't get out of it, in a savings account or a mutual fund or something that you want to hold long term. And I think Bitcoin's looking like a little bit of a hedge as well, and that's why we see Bitcoin probably about to take off.
There's a multi-sector oil fund. There's also triple leverage and double leverage
Correct.
ETFs that we can look up for you guys. For sure.
And by the way, people, once again, they just like commodities because of leverage, triple ETF, and they do have those for the oils, and a triple ETF has 3 times leverage, and commodities have even more leverage. And we talk about Bitcoin, a Bitcoin futures contract on the CME is actually 5 Bitcoin, so it's 5 times leverage. And that's such a scare word for people. You're playing with fire, yet you can control fire. We all cook with fire. We all heat our homes back in the day with fire. Fire is dangerous, but it also is very useful if you control it. And if you've noticed, everything we've talked about today, John and I both have stop losses. So leverage is not a dangerous thing when you have a game plan, when you have stop loss. In fact, it's a good thing. That's how you make more money without having to risk as much. I guarantee most financial advisors will say, stay away from Bitcoin, stay away from leveraged ETFs, voodoo. But that's exactly wrong. It's how you get more bang for your buck. You can use your money. Some people have a trading account that is small. They can only buy one of these or the other. If you're using leverage, you can do both the S&P and oil, or maybe even Bitcoin and the S&P. So that's one of the biggest misconceptions out there with trading is that leverage, it is dangerous. Driving a car is dangerous. Fire is dangerous, but they're also very useful mechanisms in your life.
Yep.
And I think that gets lost a lot of times. But once again, we're not financial advisors, but that's probably better advice than you're going to get from your financial advisor. I
can't debate that. But I guess we'll call this show number 1 of our quick hitting segments, and then look for us. We're going to create a YouTube channel within the Predictive Playbook, which many of you already subscribe. So if you haven't, make sure you get over there. Just either search John Ryan, which is me, obviously, or the Predictive Playbook, and they'll come up, and you'll easily recognize them because there's a ton of sports shows and also these Bitcoin shows with the fancy little graphics that I use. Thanking Adobe Stock for that opportunity to use those licensed products. So, Steve, thanks for your time today. And like I said, guys, we're going to be back with quick hitting segments, making it easy for you to see what we're doing and also learn a ton within about a 5 to 10 minute span. So on behalf of Steve, myself, WagerTalk.com and SportsMemo.com, may all the trades win for you.